Hello guys, good day. Welcome to another video lecture in ACC 221 Intermediate Accounting 3. In this video lecture, we will be discussing the accounting changes that we might face in the preparation of our financial statements. And these accounting changes, guys, are divided into two. We have the change in accounting estimate, and the other one is the change in accounting policy. But the focus of our video discussion for this lecture is all about change in accounting estimate. All right. So as we all know, accounting changes can have a great impact on an entity's reported earnings. Thus, it is critically important that users of financial statements understand the nature and effect of accounting changes and must not rely solely on the bottom line, which is the net income or the net loss. So to formally start our discussion with changes in accounting estimate, let us first identify the concept of it by first discussing the definition of what really an accounting estimate is all about. So accounting estimate or change in accounting estimate, it is an adjustment of the carrying amount of an asset or a liability or the amounts of the periodic consumption of an asset that results from the assessment of the present status and the expected future benefit and obligation associated with the asset and liability. So from the definition itself, guys, as we all know that we don't actually prepare financial statements with absolute accuracy because we know for a fact that we use estimates. No, there are line items in our financial statements that are products of estimates, and those estimates are actually will change as time passes by, and therefore we are required, in order for us to prepare a more objective and more relevant financial statement, to adjust whatever estimates we have if ever there are more reliable estimate of that item in our financial statements. All right. So, of course, as a result of the wait, before that, guys, proceed muna tayo sa um, concept of our um, changes in accounting estimate. So, as I have mentioned earlier, a change in accounting estimate is a normal recurring correction or adjustment of an asset or liability, which is the natural result of the use of an estimate. So, being said earlier that in the preparation of our financial statement, we really use estimates. And therefore, when there are more relevant basis for us to generate a more reliable statement, then we are required as well to adjust whatever are those estimates. All right. So the use of reasonable estimate is an essential part of the preparation of the financial statements and does not undermine their reliability. But however, when these estimates nga, guys, are um when there are more reliable estimates nga, so that is why we are required to adjust, no? So that is why meron tayong changes in accounting estimate. So, as we all know, just to make this concept clear, na in the preparation of our financial statements, we use estimates. Pero, when there are circumstances that, again, leads us into ascertaining a more reliable estimate, then we need to update such previously made nato na mga estimate. So that is why meron tayong change in accounting estimate. Alright? So an estimate may need revision of changes occurring regarding the circumstances which the estimate was based or as a result of a new information, more experience, or subsequent development. So when there are activities, when these activities gives us um, more relevant information and more cleared na estimate compared our previous estimate, then we are required to make such an adjustment in our financial statements. So by its nature, the revision of the estimate does not relate to prior period and is not a correction of an error. So to make it clear, when there are change in accounting estimate, it should be established apart from your error correction because change in accounting estimate is not a is not a correction of an error. All right. So this time, let's proceed on um, examples of an accounting estimate. So, what are the examples of our accounting estimate? So, as a result of the uncertainties in business activities, many items in financial statements cannot be measured with precision, but can only be made estimates. No? Or can only be estimated. And this estimate involves judgment based on the latest available and reliable information. So these estimates may be required for the following, like in accounting for our bad debts. So as we all know, we only provide certain percentage of our AR that is considered uncollectible. So of course, we are not really absolute on saying that the expected percentage is 5% of your AR or 2% of your net sales that is uncollectible. So all of those are just product of our assumptions and product of our estimates. Number two is your inventory obsolescence, like the obsolescence of our inventory. Like we don't actually know the actual write down of the inventory that we have and implemented and adjusted sa ato ang mga inventories. Number three, guys, is the useful life, residual value, and the expected pattern of consumption of the benefit of depreciable life. So, example also of the estimates that we do is the useful life. For example, for computation purposes of our depreciation expense, we assume that there are only 5 years or 10 years na expected useful life of our property, plant, and equipment and all other depreciable assets, where in fact, we don't actually know the absolute, no, the 100% na useful life of that property, just like your residual value. So when accounting for our depreciation expense, we usually deduct this residual value. But take note, guys, we can only ascertain the value of it, this residual value, on the date when we actually dispose this property as a scrap. No? The moment na we are still using it, so this residual value will more likely be just a product of our assumption or estimate. And as time passes by, there are tendencies that this residual value that is estimated can be changed due to some information or experiences or more development that we have, no, along the way. And then we also have warranty cost and the fair value of your financial assets and your financial liability. So again, guys, there are items in our financial statements that are products of estimates. That is very common because that is one of the limitations in the preparation of our financial statements. But however, what is good is that when we actually discover a um, more relevant information, we tend, no, we have the chance to change it, no, in a form of accounting changes like accounting estimate. All right. So to continue, we have here the process on reporting the changes in our accounting estimate. So how are we going to report accounting estimate? So the effect of change in accounting estimate shall be recognized currently and prospectively by including it in income or loss. So take note of the term currently and prospectively. So that means, guys, it will not have a retroactive effect. For example, when there are changes in your useful life or changes in your scrap value, when for example you had already computed the depreciation expense for 2 years, so when you have discovered a more reliable na value of the scrap value or the salvage value of that property only on the third year, then that means you don't have or you don't need to adjust whatever are your computed depreciation expense for the last 2 years, because it will only take its effect on the date it was changed, no, when the accounting estimate has actually changed. For example, it was only changed on the third year, then therefore it will only have an effect from third year onwards. Okay, no adjustment is required for the prior years that has been computed using the previous estimate you had. All right, so that should be clear. It should be reported currently and prospectively. No retroactive um, effect on your financial statements. Now, the period of the change affects the period only. That's what currently and prospectively means. And the period of change in future periods if the change affects both. No? A change in accounting estimate shall not be accounted for by restating amounts reported in the financial statements of prior periods, as mentioned earlier. Otherwise stated, changes in accounting estimate are not prior period errors, and therefore no adjustment is necessary to effect the change. Alright? So to make it clear, let's go back with my example earlier. Let us say you have your equipment. We have the expected useful life of your equipment is 5 years, and then during the first year you have assumed that the scrap value is, let's say, 50,000. Okay, so 50,000, so that means if you have 50,000 and the expected useful life is 5 years, and the value of it is, for example, we have 5 million. All right, and then the expected useful life is 5 years and the scrap value is 50,000. So that means your depreciable amount is 4,950,000. Your depreciable amount is 4,950,000. You divide it for 5 years, then that means every year, no, you will be recording a depreciation expense of 990,000. So that is from 5 billion minus 50,000 na assumed scrap value of the property divided by 5 years. So that means for the first year, you will be recording a depreciation expense of 990,000. Now, what if there is a change in your estimate with regards to your scrap value? Let us say your scrap value from 50,000 becomes 100,000. All right. So that means in the computation of your depreciation expense on the second year onwards, you will no longer deduct 50K on your historical cost, but rather you will deduct it by 100,000. So that means magkano naman ang depreciation expense nato? So that means um from your depreciation expense na 990,000, it will now be changed into a more updated na depreciation expense using the new ano using the new more reliable na scrap value. All right? So, sir, what will happen to the 990? So, as mentioned in the standard, the 990,000 will no longer be adjusted because it is not a change, or it is not a prior period error that requires any adjustment. So, any change in accounting estimate will only be affecting, or will only be recognized currently and prospectively. It will only affect current and the future years to come. Okay. So, of course, we have there the effect of a change in accounting estimate means that the change is applied to transactions, other events, and conditions from the date of change in estimate. So that means when from 50,000, the change, okay, took effect on immediately the first day after the first accounting period. So that means that change, guys, will only take effect from that date of change in the future. No more adjustment will be made in the prior year. So for example, we have here a depreciable asset costing 500,000 is estimated to have a useful life of 5 years at the beginning of third year. The original life is changed to 8 years. So thus, the asset has a remaining life of 6 years. So in this case, guys, earlier, the previously mentioned example was there was a change in scrap value. But this time, the change is by or through the remaining life. Okay, so originally the expected useful life of the property is with 5 years, pero it was changed from 5 to 8 years, and then it was only ascertained at the beginning of third year. So that means there are already 2 years that has lapsed. So that means, so from the 8 years minus 2 years that has lapsed, so the remaining life of that property is 6 years, not 3 years. Okay? So the procedure is not to correct past depreciation, but instead the remaining carrying amount of 300,000 all right, which is 500,000 minus the 200,000 depreciation for 2 years, is now allocated over 6 years or a subsequent annual depreciation of 50,000. Okay, so instead of continuing to depreciate it with 3 years, no, so the remaining expected useful life will now be 6 years from 8 years minus 2 years na naglapse, so the remaining life is 6 years. And of course, we have their remaining na carrying amount of 300,000, which is the net of the cost na 500,000 minus the 200,000 depreciation expense for the last 2 years. So meron tayong 300,000. And then this 300,000 will be allocated throughout the remaining useful life na 6 years, which is from 8 years na new expected life of the property minus 2 years na naglapse. So that means we still have a 6 years subsequent na remaining years for our property. So that means in computing for our depreciation for this property for the remaining 6 years, it will be computed by having 300,000 divided by the remaining useful life of 6 years, or recording a depreciation expense of 50,000 and accumulated expense for the next 6 years to come. No? If ever wala nang changes na mag-occur in this property. Alright? However, for the 200,000, no, which is the accumulated depreciation that you have recorded in the past for year 1 and year 2 respectively, it will remain as is because there is no adjustment that will be made from the previous depreciation that you have recorded. All right? Because that's what the standard has suggested in terms of recording your accounting estimate. All right? I hope that is clear, guys. Now, this time, we have another example, which is a change in depreciation method. So, change in depreciation method is accounted for as change in accounting policy. As we all know, guys, that there are a lot of ways on how are we going to depreciate our um, depreciable assets. Like, the most common one is the straight line method. But aside from that straight line method, we also have this um, double declining method or 150% declining balance method or sum of years digits or any other forms of depreciation as per suggested by the standard on depreciation. All right. So, PAS 16, paragraph 61 provides that the depreciation method shall be reviewed at least at each financial year end, and if there has been as a significant change in the expected pattern to consumption of future economic benefit embodied in an asset, then the method shall be changed to reflect the changed pattern, and such change shall be accounted as a change in accounting estimate. So, another example of a change in accounting estimate is your change in depreciation method. So, we have here an illustration having a change in depreciation method. So, an entity decided to change from sum of years digits method to straight line method. So, originally, it has used SYD in depreciating its property, but they have decided to change it from SYD to straight line method. So the asset originally has a cost of 1 million, which was acquired on January 1, 2011, and it was changed the depreciation method was changed on January 1, 2013. So that only means there are 2 years na nagamit sila ng SYD, and after 2 years they have shifted to straight line method. All right? And the estimated useful life is 4 years. Now, of course, from 4 years, 2 years has lapsed and 2 years will still come. No? So for the last 2 years, they have used SYD, and the next 2 years, they will be using straight line method. All right. So how are we going to account for this? So same, no? Um, we will compute first the carrying amount on January 1, 2013. So using the sum of years digits, so our computation will be like this to compute for our carrying amount. So we have a cost of 1 million, and then to compute for our accumulated depreciation for the last 2 years, so we have 4 over 10. So as we all know, guys, we have the formula of we have a formula man of computing this. So please refer on your discussion sa inyong depreciation. So we have here 4 over 10. So times, so this is 4 guys because we have 4 years. All right. Divide 10 times 1 million. So we have 400,000 for 2011. And your depreciation expense for 2012, we have 3 over 10. So 3 because there are 3 years remaining na lang. So 3 over 10 times 1 million. So we have a total accumulated depreciation for the last 2 years of 700,000. So that means what's left is 300,000 na lang, okay, as our carrying amount on January 1, 2013. So since we already have computed the carrying amount on January 1, 2013, which the date ang change of accounting estimate has occurred, so that is also the same carrying amount that will be used in computing for the depreciation expense for the next 2 years to come. Okay? So that means how many years has left na lang man. So duha na lang ka years ang nabilin. So that means to compute for the depreciation expense for the next 2 years will now be um will now be 300,000 divided by 2 years na remaining. So that means your depreciation expense for the next 2 years for 2013 and 20, for 2014 respectively will be 150,000. All right? So debit to depreciation expense for 150,000 and credit to accumulated depreciation for 150,000 also. All right? No? Basic rule in changes in methods of depreciation, before you compute for the new depreciation, you need to compute first the carrying amount on the date where the change has made. Okay? So, may it be from SYD to straight line method or from straight line method to SYD. So, you really need to compute first the carrying amount of your property on the date of the change has made, and then before you move to the computation of your depreciation expense. Just like this, no? You computed first the carrying amount on the date of the change in accounting estimate has changed or has occurred. So you have there on January 1, 2013 na 300,000, and then you divide it, no? From 300,000 to the remaining useful life na 2 years. So 300,000 divide 2 years. All right? So this time guys, what if baliktad naman? Same illustration but baliktad from straight line method to SYD. So compute for the depreciation expense for year 3 and year 4. Alright? So that will be your assignment. If you have answers for that, depreciation expense for year 3 and year 4, please comment down below. The scenario would be same setting, but it's just that baliktad naman this time from straight line method to SYD. Compute for the depreciation expense for year 3 and year 4. Alright? Comment down below for your answers. Alright? So, I guess that's it for our short discussion for changes in accounting estimate. Alright, so our next topic will be the second part of our accounting changes, which is your change in accounting policy. So if you have more time, you can also follow or read the following sources for supplementary readings. And if you have any more questions or clarifications or additional inputs that you would like to share in the class, please have it and share it during our virtual class. All right. Thank you very much for your watching and have a nice day.